Good afternoon. My name is Layla Al-Ammar. I work at the research department in Kuwait Financial Center, Markaz. I'm going to be speaking to you today about a new report we have out in our infrastructure series called GCC ICT, or Information and Communications Technology. I'm going to go through an overview of the GCC and then just tackle the three largest markets in brief: Saudi Arabia, UAE, and Kuwait. Now, as the world has become increasingly digitized, the GCC countries have made concentrated efforts at keeping up with these global developments in the information and communications technology, or ICT, arena. These have ranged from direct government investments in ICT infrastructure, such as fixed, mobile, and internet communications networks, in addition to liberalizing the ICT sector to encourage private sector participation. ICT infrastructure includes hardware and software required for an IT system, in addition to telecommunications equipment such as analog and fiber optic cables. And ICT spending in the region has been growing at a healthy rate. In the UAE, for example, spending on IT infrastructure has grown at a CAGR of about 18% over the past 5 years. Moreover, most GCC telecom markets are liberalized and highly competitive. Spending on ICT in the GCC is likely to reach about $180 billion over the next 3 years. The pace of growth in IT spending has been decelerating since 2004 and is expected to grow at 8 to 10% over the next 3 years, driven by the larger countries, which are Saudi Arabia and the UAE, who account for about 50% and 25% respectively of total ICT spending in the GCC. Major economic reforms and diversification initiatives taken by the governments, coupled with record high oil revenues, have paved the way for increased investment opportunities in Saudi Arabia's ICT sector in the past 5 years. Additionally, within the kingdom, the Communications and Information Technology Commission, or CITC, was established in 2001 as an independent market regulator to provide universally available, high quality and affordable information and communications technology to the kingdom. Major telecom players in the kingdom include the incumbent Saudi telecom company, Ittihad Etisalat, Zain, and Ittihad Adib Telecom. STC, the incumbent, offers fixed line, mobile, and data services, while Ittihad Etisalat, or Mobily, and Zain are mobile operators. STC's market share has gone down dramatically since the introduction of Mobily, and further with Zain when the sector was liberalized, and stood at 64% at the end of 2008. As for ICT spending in the Kingdom of Saudi Arabia, it grew at 17% in 2008 to about $24 billion. And over 75% of this was in communication spending. This is expected to have decelerated sharply to a 4% growth in 2009 to about $25 billion. And ICT spending in Saudi Arabia is forecasted to grow at a 3-year CAGR of about 8% to $32 billion by 2012, versus the 17% CAGR which has been clocked over the past 5 years. The majority of spending, about 50% of it, goes to the consumer sector, followed distantly by energy and utilities with an average of 12%, and the government sector with about 9% of total ICT spending. The ICT market is expected to see robust spending in Saudi Arabia, led by new entrants into the telecommunications segment. The upgrading of the telecommunications network is also likely to be a major driver of infrastructure spending, and Saudi Arabia is expected to account for over 50% of total GCC ICT spending over the next 3 years. And of the nearly $90 billion which is expected to be spent on infrastructure in Saudi Arabia by 2012, about $22 billion of it is likely to be spent on IT, while the majority, $67 billion, will be spent likely on telecommunications. Over to the UAE. The UAE's ICT market is highly developed, and the country has built up robust ICT infrastructure in the last 10 years. Dubai is one of the leading cities in the Middle East in adopting the latest technology and accommodates more than 1,000 companies in the IT and telecom sectors currently operating within its Dubai Internet City. Furthermore, the Telecommunications Regulatory Authority was established as an independent regulator for the market in 2003. According to the World Economic Forum 2008 Global Information Technology Report, the UAE ranks 27th out of 134 in terms of network readiness. It's also the highest ranked, which is the highest ranking among GCC nations. It also scores the highest in terms of government prioritization of ICT at 5th place out of 134 countries. ICT spending in the UAE has grown at a 5-year CAGR of about 18% to nearly $12 billion, about 75% of which is for the communications segment. This growth is expected to moderate over the next 3 years with a CAGR of 10% to about $16.5 billion by 2012. As for 2008, the ICT spending in the UAE grew about 23% before decelerating sharply to about 5% in 2009. The majority of ICT spending in the UAE is on the consumer segment at about 50%, while about 7 to 8% is spent on energy, government, and services sectors each. Spending on IT, which includes capital expenditures on hardware and software, in the UAE has grown at a 5-year CAGR of about 18%, led by the expansion in the industry. IT spending is expected to moderate, growing by about 10% over the next 3 years to a total of about $45.8 billion, the majority of which is expected to be on communication, while the remainder is for the IT segment. And now finally to Kuwait, which is currently the 3rd largest IT spender within the GCC, but closely followed by Qatar at 4th. Kuwait is currently the only GCC country that has yet to establish an independent communications regulator. However, the Ministry of Communications supervises the wired network in Kuwait and has managed to put up an ICT infrastructure for growing use in IT's various sectors. According to the World Economic Forum's Global Information Technology Report, dated 2008, Kuwait ranked 57th in terms of network readiness out of 134 countries, which is the lowest ranking by any GCC nation. Kuwait also ranked the lowest among the GCC in terms of government prioritization of ICT at 96th out of 134 countries. ICT spending in Kuwait reached about $4.8 billion in 2008, the majority of which was spent on the consumer segment at about roughly 50% of ICT spending. The second and third highest segments for ICT are energy and utilities and services, with about 10% of total ICT spending each. These allocations of spending have not changed since 2003. Growth in Kuwait's ICT market is being largely driven by increased investments in the computer hardware and IT segments by the government as well as private players, in addition to the aggressive expansion plans by the region's telecom operators. Kuwait is the 3rd largest spender of ICT within the GCC, and the ICT spending in Kuwait has grown at a CAGR of about 16% between 2003 and 2008, and is expected to moderate to a 10% annualized growth over the next 3 years. The bulk of ICT spending, about 80%, goes towards communications, while the rest goes to computer hardware and software. About $16.5 billion is likely to be spent on ICT infrastructure over the next 3 years, over $12.7 billion of which is expected to be spent on the communications segment, while the remainder will go to IT. Now, looking forward to the future of the ICT arena in the GCC. For telecoms, first of all, given that most of the GCC countries are well over their mobile telecommunications saturation rates of about 100%, many of the GCC's telecom operators have been looking to high-growth markets in the Far East and Africa in order to fuel the inorganic growth of their companies. However, within the GCC region, there is room for similar inorganic growth, and some industry specialists see a period of consolidation in the next few years as slowing subscriber growth and a less than favorable economic environment begin to take their toll on the GCC telecom players. According to a recent report by Fitch Ratings, the three largest GCC telecom operators, Etisalat, Saudi Telecom, and QTEL, which have the healthiest balance sheets, are likely to snap up many of the smaller regional players over the next 5 to 10 years. The Fitch report named Saudi Arabia, Qatar, and Kuwait as the markets with the most potential for this kind of growth in the coming 3 years. We expect that high population growth and continued economic health will fuel the growth in Saudi Arabia and Qatar, while in the case of Kuwait, a low mobile penetration rate of about 84%, coupled with intensified competition caused by new entrants, will fuel subscriber growth over the coming few years. Fitch also expects capital expenditures among telecom firms to remain on track, given the relatively strong liquidity positions of major telecoms in the region, who are flush with cash and may begin looking at regional players that look attractive due to appreciated value. Internet penetration in the GCC is very low compared to other emerging or developing markets. And one of the main challenges for growth in this segment has been the lack of Arabic content online. Arabic speakers account for about 6% of the world's population, and yet they account for less than 1% of online content. However, the private sector has been making distinct steps in addressing this shortage, and the number of Arabic web pages, including bilingual ones, has increased by roughly 66% to about 189 million pages as of 2006, and is expected to surge to about 5.1 billion pages by 2012. The growth potential of the region has also attracted the eye of private sector players on a large global scale, as in August of 2009, the internet giant Yahoo acquired Maktub.com, which is an Arabic online portal and search engine that caters to about 16.5 million people. On the regulatory side, the establishment of an independent regulatory body is vital for the development of the ICT sector, as it fosters an era of fair competition in the market, whether it be in the fixed, mobile, or internet segments. Most of the GCC countries have established independent regulators who are actively moving towards opening up their respective markets by issuing new licenses. As of now, Kuwait is the only GCC country which lacks an independent telecommunications regulator. The last major challenge for the ICT sector going forward is government support. Now, though the majority of ICT spending tends to come from private sector players, government support remains vital in attracting this private sector interest by providing an efficient base. High fiscal surpluses in the past few years have allowed governments to allocate more spending towards the ICT sector, but should economic conditions worsen in the region, or should the global downturn prove to be more protracted than we had thought, these reduced fiscal surpluses in the coming years may moderate this effort by GCC government. That's your GCC ICT sector overview. Thank you for listening. Have a good day.